Thank you for tuning in to another edition of the Vulcan Report. Jumping right into things, let's take a look at the U.S. dollar index ETF. The ticker symbol is UUP. As you can see, this market is still in a well-established downtrend. We are trading below the Kumo cloud, and as you can see in the bottom right-hand corner, the little red bear and the bearish reading right here. This market is still in a well-established downtrend, and right now is on track to take out this recent support from July the 26th of $20.91. As we break this this next low here, we will be creating a new pulse wave cycle, and that next wave will take us quite far to hitting new lows in this security. So the warning goes out now that once we take this out, the dollar is going to be in serious crisis, and we anticipate that we would see some sort of intervention from the U.S. government of some sort, whether it be more printing or some other types of liquidity, whether it's announced or not. They just cannot allow the dollar to continue to depreciate so rapidly like it's doing now. And like I said, it is in a well-established downtrend. Okay, if you look at the U.S. dollar index futures contract, you'll see what I mean as far as hitting the next pulse wave cycle. Right now, we are currently we closed yesterday around 73.95. Okay, you can see we're starting to accelerate to the downside here. We are starting a new pulse wave to the downside in the futures, as you can see here, and so we're now in jeopardy of breaking below that 73 handle. Okay, and once that happens, it's going to be, like I said, a very quick drop to 72 unless the government intervenes in some kind of way and stops this. We have a disastrous situation happening if we break below 72, just like I've told you before. Alright, so we're going to have to watch this one and see what happens. But with the weakening dollar, we should start to see commodities strengthening as a result of that weaker dollar. Alright, taking a look now at excuse me, at U.S. Treasuries, we'll take a look at the 10-year note, which is a very popular tool to trade. You can see that this one, hence the green bull in the bottom right-hand corner, we're still in a bull market. Market has been pulling back and testing the breakout support, as you can see here, how we've gone straight up in a row here. So this one I would look for potential breakouts here in this one. I would look in both directions. I would look to breakouts to the upside and to the downside, because we don't know if we're going to take out the support and start a retracement process or not. Okay, back when we hit this was a spike candle here on August the 9th when we hit 74.11. When we did that, we only had a swing VIX reading of 36. So that's not I mean that's a resistance reading, but it's not an overbought reading. Okay, so we hit overbought back here, and we still start to go higher. So we really never really corrected yet. So this could just be support building for the next breakout phase to the upside. So we would have to watch the 10-year notes for that, especially if the U.S. stock market resumes its downtrend. Once that happens, then yeah, I will expect for these bonds to explode when tomorrow's open. Alright, taking a look here at the euro currency. Euro currency right now is sideways. We do not have a trend right now in the euro currency. We have the excuse me, formation building of a Kumo cloud here. So because we are technically inside the cloud, as you can see, we close right at the resistance zone here, the upper part of the cloud. That means we have a see the little the sand thing, the hourglass. So right now we're in a consolidation pattern by time and price, and so we'll have to wait and see if we break out or break down. But as we know, the euro currency normally leads the U.S. stock market, so we have to wait and see what develops on this one. So no entries on this particular one going forward for the next day. Taking a look now at crude oil, ticker symbol DIG. All right, this is the ETF to trade that, very popular one. You can see we're in a bear market. See, bearish reading, red little bear, little teddy bear at the bottom right hand corner. But we're trying to retrace. Okay, we got oversold. All right, didn't find a base until several dollars down. Now we're trying to bounce, a little dead cat bounce. So this is a little support zone, trying to get back up here toward this red line resistance. And ultimately, if it can do it, get back up toward the Kumo cloud. We'll just have to wait and see. But we do have strength momentum reading, so you'll be looking to both buy and sell on this one for the most part. And of course, like I always do, the commentary along with entries and exits and complete analysis will be available after this video on the blog at pulsescan.blogspot.com, where you can read further and look at the more in-depth analysis. Okay, so this one is trying to continue to retrace. We'll have to watch all and see what we can see, what happens, see what develops with that one. I'm sorry, this was the Dow I'm looking at. I'm sorry. It's not DIG, it's DDM, the Ultra Dow. I'm sorry. This is the Ultra Dow. And you'll see that this chart is kind of similar to the oil chart as well. But yeah, DDM, this is the Dow. So the uptrend could be over, and we could be starting the beginning of the next leg down, which would take out this support and continue and create a new pulse wave to the downside. That's what we'll be watching for on the next trading session. Okay, now looking at ticker symbol DIG, which is the crude oil, the Ultra Pro Shares crude oil. See, it's the same chart pattern. Oil is moving with the U.S. indices now, and it's in a bear market, and you have a little red teddy bear. So again, we'll see if we can go higher, or if the market's going to correct and start a new wave down. And if we do, that's a new pulse wave to the downside that could be pretty explosive and spell getting the DIG actually into the 20s, depending on how long this lasts. So we'll have to look and see what happens with that one. Looking at the financial sector, you know that Bank of America has been in the news, and along with Goldman Sachs being sued by the SEC. A little bit weaker retracement here. Okay. Totally inside. We have this long candle here from $15.20 down to $8.72. That's the established range now. So this market has several dollars. It can just go up and down without even having a trend. But again, look for a breakout either to the up or downside. Understand that there are corresponding ETFs for the ones that we're going over, and those are the ones you want to buy. Okay, if the markets break to the downside, you want to buy the inverse ETFs. And for the Dow, it's DXD. For the oil, it's DUG, and for the financial sector, it's FAZ. Okay. All right, looking at gold now. Everyone asks me about gold and silver on a daily basis. What do you think about gold and silver? Ticker symbol GLD for gold. They have some new ones now that you'll want to take a look at. It's Nugget and Dust. NUGT is the 3 times ETF, and DUST is the inverse one. So that's a good way to trade gold now. Okay, as you can see, we broke out, continued to hit new highs. We just strong, nice upward. Now we're in a corrective phase now. So it's do or die. Are we going to continue to correct, or are we going to break out? That's what you're going to need to watch for in the next trading session on this one. And as you can see, we broke pulse wave a long time ago back in here. And so we have a long way to go. Support is way down here in the, beyond the 150 area. The Kumo cloud is. And as you can see, we closed around 170, 180 yesterday. So that's a $20 corrective move that we can sustain and still be bullish. I expect that this will probably just continue to run higher until some sort of unmovable force stops it. As you can see, we're bullish since the last pulse wave, green little bull here in the corner. Alright, taking a look now at the commodities market, which is very important because we all have to eat. Ticker symbol JJS. This is the softs. Alright, so this is like sugar and cocoa, coffee. Okay, as you can see, chart is almost similar to the Dow and the oil, right? So it's trying to correct from a bear market condition. Little teddy bear in the corner there. So we'll have to watch this one and see if it can continue to correct and hit resistance at the bottom of the Kumo cloud, or if it's going to break down. Chances are it will most likely break down. Alright, looking at one of my favorite here, the Ultra NASDAQ. This is the ticker symbol QLD, the NASDAQ 100 Ultra ETF. Again, just like the Dow one we watched, trying to correct. More than likely, we will break down and create a new leg. We are in a bear market. A little teddy bear there. Bearish reading. We're below the cloud. However, we are above the long-term trend line support. Okay, but the trend and the momentum is pointing downward here. So we'll have to watch that and see what happens. And last but not least, ticker symbol SLV for the silver ETF. We're still in the death cloud, Kumo cloud of death. Resistance is up here. Support in the cloud is right down here. Several dollars, several dollars. That this market can just ebb and flow and move up and down, which is probably going to do. And that's around $40.16 to the top, $34.43 to the bottom. So you got like a $6 range that silver is just whipping in and out of. Cannot break out of this Kumo cloud of death. So prices are just going to remain sideways and consolidated until, again, something triggers it. Trend is neutral, hence the question mark. Don't know. It can break up, it can break down. Fundamentally speaking, we expect gold and silver to be priceless, but until they get there, they're not there. So anything goes until you get there. We had a false breakout back here. We broke out, closed above the cloud right here, broke out, inched a little higher, and then collapsed all in the same day. Huge collapse. So head fake, collapse. Head fake, collapse. Okay, that's what we expect to continue to happen until it doesn't. All right, real quick, let's look at the sheet. You'll notice that you have a lot of new technical indicators and things to look at in the sheet. As you can see here, you have your readings at the top. These are your main triggers right here. Alright, this column L is just your intraday resistance. You don't enter the market on that. You enter the market on your key reversals and your CPWBOs. And then here are the signals for those. CPW signals, key reversal signals, rally alerts, high volatility alerts. You also have your Kumo indicators. This is the Kumo resistance at the top of the Kumo cloud, Kumo support bottom of the cloud. You have your reading, your bull market reading, and one means it's a bull market. Long-term trend line support gives you the actual number of where the support is in that security. And I also added the 50-50 for you. Let's say you see your favorite security and you want to trade it and you don't have an actual entry point. The system didn't trigger a buy or sell. All right, on the long side of the market here is your 50-50. Pandora will crunch all the data, look at where the market is, and give you a buy or sell reading or sidelines, no signal reading. So it's a 50-50. You can enter on this, look for small profits, and then look to get out same day. And then here is your trailing stop and reverse, your initial reverse, where you're going to put your stop loss at. Okay, and then you scroll over to the end, and then here's your bear market, your sell signals, same thing. Okay. And we'll do some additional videos in the future. But remember, take what you can and give nothing back.